Welcome back. The Nifty is just under 8,600, 8591 odd is where the index is at this point. Absolutely flat, 5-point change. Rohit Srivastava, fund manager with Sharekhan, is with us right now this Monday morning. Rohit, good morning. Good to have you here. You think at about 8,600 this move back up is going to peter out, or not really? We are up and going to be up for a while now.
Maybe not for a while, but the bounce back that we saw late last week, or rather on the first day of the month, is a possible indication that we could see a little more upside. 8,600 is a good resistance level. If we don't go beyond 8,600, yes, we could head down from here itself. But there is a possibility that you stretch a bit, maybe till around 8,740 or 8,800. Which I will be watching out for over the next day or two. And if that does not happen, then probably from here itself we should start heading down again. So I'm keeping it a bit open for another 100 points possible, 100, 150 points possible upside. But the overall idea is that most probably we've topped out in the month of March. What I was anticipating is probably a much deeper cut in this move itself. The sell-off we saw in March seems to have paused, and we are retracing those losses. And 61% of that entire fall comes somewhere around the 8,800 mark. So I think that would be the best case scenario if we do stretch up that much. Overall, we should still be heading down, is what I think.
Yeah, but if you get to 8,800, I mean, you know, that's within a couple of percentage points of new highs. So then... but you also say that we should be heading down. You mean that we'll get there and then start another leg down?
That's right. I think we'll get to 8,800 or 8,740 and start another leg down. It may be a few percentage points off, but you know, we've seen for the last several months the market has been moving in a 5 to 8% range on both sides. And that's been pretty narrow. So you're almost close to 2-3% from making a new high or making a new low each time. So that's not really been a big move, but I think you're getting to the point where we break out of this range, because most indicators, at least on the weekly and monthly closings that we've had over the last 2 weeks, are all on the sell side. So what you have is multiple negative divergences. Now, these divergences sometimes continue, and we've seen it continue for a way more prolonged time than we usually get based on years of data. But the indication still is that you need to correct a little more before you can even head up. So, on the monthly degree, based on this month's closing, my sense is that we may have completed the entire 1.5 year rally itself. So that should mean a more prolonged corrective phase, which could last for several months to come.
Banks on Wednesday all came back strongly. Bank of India was up 5, Punjab National Bank, Bank of Baroda, State Bank, all 3-4% each. Now, what do you think happens there?
I think banks have been the weakest section because they topped in the month of January. If you just go by the CNX Bank Index, and the PSU banks had their sharpest sell-off in Jan itself, after which they've fallen a bit, but not so sharply. But overall, if you look, they've all been down because it was a short week last week. I think all of these indices and stocks actually closed the week positive for the last week, but it was a 3-day trading week. So I'm not sure those are indications of a reversal, because we've seen a lot of downside, and then you get one 5-day 5% day up. That's normal. It happens. You get sharp bounce backs in a downtrend, but it's hard to really say that the trend has changed. And banking would be one of the prime areas where you'd look for a reversal in trend, because that's been the weakest section, like I said. I think the bank index itself, you'd look at levels of around 18,800 as a resistance, and see what it does around here. So we are at that point. But again, my sense is that banks should be leading the way down.
Okay, bank should be leading the way down. Oil has been weak, Sharekhan. Beg your pardon. Rohit, oil has been weak, and IT has been weak as well. What do you think happens to those two sectors? I mean, Reliance, for example, ONGC to some degree, and IT broadly. I mean, everything has been facing southwards. Not too much by way of a cut if you see what stocks have done on the way up, but still, relatively speaking, weak.
Yeah, I think oil plays a very important role in how these companies do so. Falling oil prices have been somewhat beneficiary maybe to the oil marketing companies, but not exactly the those who are in the core oil business, and Reliance being in that. I think a fall in oil prices has impacted various levels. And Reliance itself has been one of the weakest performers, I think, ever since 2008. It never went past that high. It retraced only 60% of that in 2010. And it's been below that level for most of the last 5 years, So when we plot a relative strength chart for Reliance versus the index, it has been one of the worst performing stocks of this period out of the large caps, and continues to do that each time we try to anticipate. Even last week it stopped a couple of times at the current a little higher than where it is right now. It looked like it could make a double or triple bottom, and it did not. It just broke right through that by the end of the week. So I think it remains the weakest and will continue to do so. There is absolutely no indication on the Reliance chart that it's reversing a trend. We try to anticipate that from time to time, but it does not work. So I think we just stay away from that. And the same would be true for even ONGC. It's been weakening, though we usually don't put out trades on ONGC because it's an erratic stock. But its gains have been very narrow over several years. So among oil, I think apart from the OMCs, I wouldn't really touch anything. That's the only very focused area where you would continue to look for some long-term trends.
Okay. What's happening globally, Rohit? Anything you'd like to highlight for our viewers? Anything different? We had the non-farm payrolls number week. 30th of April, you have the Fed meeting.
Yeah, so we have a couple of things. I think it starts with the RBI policy, which is tomorrow. And like you spoke about banks, I think most of the bounce back would have come in anticipation that there would be some rate-related measures, and once that's behind us, I think it would be discounted. And then the second sector which you asked me about is IT, and I think IT essentially tends to move a lot with the world markets, and historically it's been moving with the Nasdaq. But what we've seen this time around is bigger gains coming in the mid-cap and smaller IT stocks. The fear, of course, is that this quarter results would be taking some hit because of whatever has happened on the euro. But I think that as and when the US markets see a deeper sell-off, you will see the IT sector also see a sell-off. The near-term indicators, like the weekly momentum indicators for the IT index, has gone to the sell side over the last 2 weeks. So I think at least there could be a correction in IT stocks in the coming weeks. That much I think we should anticipate based on how the technicals and the expected news flow is for the coming month. So near term, I think they should continue to underperform the market.
Okay. All right. Fair enough. We'll leave it there, Rohit. Thanks very much for that. Great talking to you. Appreciate you coming on this morning.